By for the moment for the gross domestic product figures for the September quarter, which provides the best indicator, of course, about the health of the national economy.
Joining us now for the release of those GDP figures is CommSec Chief Economist Craig James. Craig, what is the expectation for these figures?
Well, the expectation was for an increase of 0.5 or 0.6% for the quarter. The figures have just been released and they showed growth of 0.4% in the quarter, so a little bit below some of the market expectations. When we look at the annual growth rate, though, pretty much it's in line with what economists had been expecting. Economists were looking for a growth rate of 1.6 or 1.7. It came in at 1.7% growth. So what we've had is annual economic growth has lifted from the lows. It was 1.4% in the June quarter, now 1.7%. And this is basically supports the Reserve Bank view that we have reached a gentle turning point, that the economy is turning up. It's not certainly sort of barreling forth, but so there is a recovery underway. And the Reserve Bank certainly was out lengths yesterday to be able to stress that the rate cuts were working, that it was lowering the Australian dollar, was pushing up home prices, and was also putting extra dollars in those people's pockets because of the fact that interest rates have come down and people's repayments are a little bit cheaper. So overall, sort of still a very good result for the economy, because we've got to still remember, so that we've had 28 consecutive years of economic growth. So we're well into our 29th consecutive year of growth. No other country around the world has ever done that before.
And Craig, it's an extraordinary run. As we look at the comparisons internationally in other developed economies, we're still in positive territory. That's the main thing, isn't it, I guess?
Yeah, I suppose the main thing which is seemingly holding back our economy is the lack of confidence. Consumers don't seem to have any confidence. Businesses don't seem to have any confidence. I think for a lot of consumers, the fact that wages are growing at a much slower pace than what they've been used to in the past, people are still coming to an adjustment for that. And a lot of businesses are still worried about what's happening globally with the US-China trade agreement. And now, of course, more trade stoushes between the United States and other advanced countries. So if we had a little bit more confidence and we started to spend a little bit more and sort of started to embrace the positives, our economy would be growing at a faster pace. But the Australian economy has a wonderful knack of responding to crises. We've had the global financial crisis in the past. We've had droughts and floods, and the like, and we've still managed to be able to grow over that entire period of 28 consecutive years. Of course, at the moment, consumers aren't spending sort of particularly fast. But what we've had is exports continuing to rise, the government sector weighing in terms of its contribution to the economy, lifting its contribution, and also the fact that Australian companies are producing more, and that's produced some more inventories, and that's added to growth in the quarter as well. So we have a wonderful knack of getting ourselves out of difficulties, given the fact that we've got a very flexible economy.
Do you think it shows growth is growth, it's going up, but at the same time, were you expecting more with the income tax cuts coming through that was supposed to stimulate the economy? Is it a concern that it really is global factors like the iron ore prices propping this up?
Well, it just highlights the fact that you can put dollars in people's pockets, but you can't force people to be able to spend that. And that is something that the government may have to reassess. There's a lot of calls for bringing forward tax cuts and for more stimulus to come through, but that may just be another case of putting dollars in people's pockets. And if people haven't got the confidence levels to go out there and spend, so that they won't spend. So in other countries, what has been tried is voucher-type schemes, where people are given sort of voucher for perhaps $1,000 or $2,000, but there's an expiry date. If you don't spend that so the next 2 or 3 months, clearly you miss the opportunity. And that would have a very significant impact in terms of the economy, particularly if you put it into groups like pensioners, self-funded retirees that are struggling at the moment. They'd certainly welcome the opportunity to be able to get a voucher to be able to spend in the economy.